Beautiful, beautiful, beautiful guys. Welcome. We have had a little bit of a crazy afternoon with a few technical difficulties and bugs, but we're through it. We're about to have an amazing time together. This is the first time we're doing a analysis marathon. I had a different name for that, which I coined a little bit earlier. Don't Google it. I'm just telling you, don't Google it, right? Because I went to Google just to confirm the spelling. It's not what I thought it was, right? I'm just trying to say, ignore that name. We have a new way of doing things. We're going to be spending some time together, jumping into things. Now, this video, as soon as it ends, will only be available for replay to master students. If you're joining us, you're just in the DVDM normal markets group, and this is your opportunity to watch this live, take this information, absorb it, apply it to the charts, make notes, whatever you want to do. And then ultimately, masters will have playback to this video. In addition to that, masters, directly after this, I'll be sending you all of my analysis setups, right? So if you're in the masters group, for August 2021, all of my setups for MT5, I'll be saving those templates as well as the profile as a whole. So everything I've got, you're going to get. So everything we do live, and this is going to happen live, right? I haven't looked at the markets we're going to be looking at. Most of you knows masters, we're trading VIX. VIX has been an absolute monster over the past couple days. We've been making VIX pretty much since Friday with zero loss, right? Zero opposite move or zero trade that has gone against us. I don't know what the pip count is. If any of you guys know, have done the calculation, more than welcome to let me know. I'm sure it's in the region of 1,500, maybe 2,000 pips, not 100% sure. But in the next week, we're targeting between 2,000 and 4,000 pips to try and wrap up certainly the last part of August as strong as we can. So we're going to be having quite a bit of fun together over the next couple hours. Now, this is going to be analysis marathon, meaning we're going to be going for a couple hours. This can be 5 hours, 6 hours, 10 hours. It could also end up being just 2 hours. And so we're going to take a break every 45 minutes or so. I've got a lot of cameras and equipment that I've got to change batteries for, and obviously need to take a break. I'm human, right? But this is also going to be me analyzing, so I won't be talking the whole time. I'm going to be looking at markets, analyzing, and also the comments are key, right? So I will be looking at the comments. There's a bit of a delay, about 20 seconds or so. So when I ask a question, please pop in your requests. Tell me, listen, I really want to see that. Can we look at Bitcoin? Can we look at gold? Can we look at VIX? Whatever the case may be, and I will respond to that. I'm not going into the masters analysis, so if there's a deeper analysis, I will clarify that in our live session on Tuesday with masters, if we're going to go deeper than that. And this is just very general basics in terms of the setups and the weekly the items we're going to be looking at this week, right? So if it's your first time seeing something like this, I used to do a lot of this a little while back, and I really enjoyed it. It sets the precedent for the week and really highlights what it is you're supposed to be paying attention to. So we're going to be having a ton of fun together. Firstly, I just want to create a quick gap for everybody, guys. Grab that YouTube link, the most recent one I sent you. The link should end with HK in it, and I want to give everybody just 2 minutes, and I want you to go ahead and share that particular link. If you're on social media, great. If you're not, I want you to go ahead and just share with at least 2 or 3 people on your WhatsApp, on your Telegram, somebody you know that's potentially traded, or somebody you know that's traded and failed. I want to give you guys just 2 seconds. I'm going to let a beat play in here. I'm literally just going to do a countdown for about 2 minutes. I want you to go ahead and share that link, and then we're going to jump in and we're going to get started. It's going to be a nice flow this evening. We're going to have, opportunity for comments, opportunities for chats. You guys are going to be able to ask me questions. I'll pick what it is I want to answer, but you're more than welcome. Jump in, ask whatever you want to ask, and I'll be more than obliged to obviously help and give you guys feedback where possible. So 2 minutes, quickly go ahead and share this particular YouTube link with whomever you want. The more you want, the better. And I'll give you guys 2 minutes quickly to get that sorted out in the background. We're going to jam some music, and then after 2 minutes, we're going to jump in and we're going to get started. So let's go, let's share that link. Oh man, and if you are a master student and you are in that VIX buy with us, man, VIX is doing some crazy things. VIX is an absolute monster. Okay, beautiful guys. Beautiful. Okay guys, so I think it's about time. I can see a couple people have commented. Heinrich, Child of God, Leonie and Tundi have actually responded there saying they did what was asked. And remember guys, it's important to obviously comment and give feedback, right? I'm here, this is Grace, we're spending time together. This is something that I generally do by myself. Obviously I just take time, look at the markets, analyze, so I'm including you in that process. I want to see energy. It's been a long day for me, and guys, listen, I trust you've had an amazing weekend. By the way, I've had an absolutely amazing weekend. It's been a long day, so I feed off of your energy, I feed off your messages. When I see the messages flowing, I see you guys are chatting, I'm more than happy to go absolutely crazy. When I see that slow down and the energy slows, then I slow, and I can just continue this on my own. Right, guys, I know how to do this. This is my, I was with somebody today in the car and we were busy talking about, a particular trade setup, and it was busy moving, and the person was asking me, but I think it's going to go down. And I'm like, no, it's not. It's going to continue. Don't worry. Only at a certain time do we need to worry, guys. This is what I do. So let's chat. Let's keep engaged. Let's push each other. I love the energy. And obviously, as always, if you're watching right now, make sure you are subscribed. It just makes it a ton easier. You'll receive a notification when we go live or when we do anything. It just makes it a ton easier. Beautiful. I'm saying the weather was grim here, but that's Durban. Durban, doesn't matter if it's overcast, sunny. Durban is just awesome. And let me know where in the world you guys are joining us from here. I can see R Sports, Leonie, Heinrich, Jock, Child of God, Leonie, Tundi, King, Batandwa, Daniel. I can see a ton of people here. All right. If you're in VIX right now, you should be smiling. You should be absolutely smiling. Okay, so what we're going to do, guys, for this session for today is I'm going to be starting afresh on most of my charts, right? So whatever charts I've got, I'm going to use this as a clear out session to delete some of my charts. And I want to see what things do you most want to obviously let me analyze. What things do you want the most for me to go through? And then based on that, I'll look at the most votes and I'll start to systematically work through these markets. And you can choose anything. You can choose a stock, you can choose a crypto, you can choose an index, a commodity, forex pair, whatever the case may be. We will run through the fundamentals. We'll do the technicals first, and then we'll tie that up with some of the fundamentals. Okay, let's just see here. Brilliant. Masters, if you're a master in the house, I want to see hands up. Pop your hands up if you're a master in the house. And masters, every time goes back to okay, let's get in it. Right, so we're going to start off this jumping straight in. I think just let's get it done. Beautiful. Okay, so we're going to start off again with VIX. So we're going to get into our navigator here, and Let's get into our market watch, close that navigator. Let's open a brand new chart. So I think in terms of the votes, let's start with, okay, let's get the votes in. As you guys ask, I'm going to add it. So we're going to get VIX up in here. Okay, so I've got VIX. I see there is a request for gold analysis. Let's pop that one in there. So we've got VIX, we've got gold, and we're going to start right from the beginning. I'm actually even going to go one further. I'm going to save this profile, but I'm literally going to start over, brand new. Okay, so I'm literally just going to start. I'm going to close all my charts. So yeah, it's going to be a bit painful to watch. So yeah, so get in your things. King Bess is asking for US 100. Josh asking for gold. We got Bitcoin in the house. Okay. Right, so VIX 75, gold, we'll add in here S&P or US 100, which is Nasdaq. Where are you, Mr. Nasdaq? There you are. Okay, I got Nasdaq, VIX. So we are going to do dollar index as well. Heinz asking for dollar index. Let's get that in there. Nobody's asked for USD Zara, but I'm going to put that in there because I want to have a look at what's happening there. We will be looking at Bitcoin. I'm going to use TradingView for the Bitcoin analysis. Jason's asking for GBJPY. So I'm just going to add in any random there, and then as you guys know, the shortcut GBPJPY. So GBPJPY there. Okay, beautiful. Nasdaq, gold, and VIX, we got them. GBPJPY, we've got Bitcoin, we will have gold, we've got Nas, we've got Christopher saying, hey, that's what's happening. So those look like all the big ones based on what I can see. So as you guys comment and drop that in, I know there's about a 20-second delay, so we will obviously address and tackle as I see those comments come through. Size your stepson. Thunder saying gold, beautiful. So let's start with what we've got, right? Let's start with what we've got, and then we'll work from there. If there's any additional requests, throw it in there, and we will obviously jump in there. Tony saying USD CHF. Let's just check USD CHF. So I'm just going to add in a, you guys know the trick, right? Just throw in a random chart and then type it in. USD CHF. Okay, let's see. Jock's asking for US 30. I don't think I have access to US 30, do I? Oh, German 30. I won't do US 30. Okay, so that seems like enough. So let's maybe start off. Where do you guys want to start? You guys can vote. Daniel, all the way from Blantyre, Malawi. Daniel, I think, is our newest masters, if I'm not mistaken. Welcome, Daniel. Welcome. Okay, seems like we're on the right track. So I think, as always, everybody's crazy about VIX. So let's just start off with VIX. Let's just deal with this one, and let's deal with VIX. I'm gonna make myself a little bit bigger here. Let's do like that and just put me there and just get a little bit more space between us, for us. I'm just gonna do that there. Okay, that looks good. I'm happy with that. Okay, guys, so as always, let's back out. Now, many of you know, and should obviously know, that we don't worry too much about the old data, right? When it comes to VIX, we don't follow the normal trajectory of going back to a weekly and looking at all the data we possibly have, because VIX generally, and VIX 75 specifically, doesn't have as much of a history, and the history isn't as important as the current impulse. And this is what I've told you guys, or at least my masters are well aware of this. So what we're going to do is we're going to obviously use the same template every time, and I'm just going to use let's just see here, I'm going to use the DVDM naked chart, the one that you should all have access to. Okay, and then we've got our VIX setup here. Now this is showing a daily, and we go all the way back to February in terms of data. So obviously you can see from a VIX perspective, we've got that market high over there. I'm just going to change some of these instruments just to make them a little bit better for you guys. What color do you guys want to use that's going to be easy on your eyes? I think red should be fine. I'm just going to make it a bit thicker. Okay, there. So it comes to VIX, we've got an absolute high, absolute low in terms of the story of price, and that was the range we had to work with, right? Now we're in this new state of market. Now, the interesting thing about the state of market is a couple things I want to point out, right? The first one being, we are obviously in this breakout formation, right? So we've broken out in terms of that over there. We have now made that breakout, but more so, there's more market structure here that is been the reason why, you know, we've been looking for these different buys and sells. But certainly from where VIX is sitting, right, I just want you to see the market dynamics in terms of, you know, when a market starts thinning out, we start to get, you know, pin bars to the top, we start to get pin bars to the downside, but we start to obviously see the markets lose momentum. So here we got a nice healthy market, we got good momentum, good sized candlesticks, and we've got very little indecision. Day by day, solid week, VIX can trend. So that's generally the setup, right? VIX will trend in most cases once it's in that next impulse stage. VIX will trend for a week, but we have seen times where, you know, VIX will be sitting in a state of consolidation. It'll be sitting in a state of, you know, a triangle formation. We can see, you know, this here could have been interpreted potentially as a pennant or continuation, right? You could have interpreted this from a price action perspective as a bit of a continuation, but what we can see, if we just look at this with a little bit more perspective here, is that we do have a setup and a situation where this support is the most consistent thing that was available here, right? So we can see that this is rather a descending triangle. So when we get stuck in these kind of price action situations, VIX can hover. In this particular case, VIX hovered for a total of 19 trading days. So for about 2 weeks, you know, VIX was buying low, selling high, and in that bit of a consolidation stage, right? But we can see that the momentum has sort of been lost towards the top side. So the expectation outside of just the pure price action was that we should be looking for a shorter continuation, a reversal in terms of this triangle, and we've got a massive break. But where we are now, I want you also start to see how thin this market is busy getting at this point in time, right? We're getting a lot of these rejections towards the downside, and this is on a daily. So we're getting a fairly flat market. We've pretty much traded sideways, albeit a little bit of a bearish move, and I'm going to dive in on this from a story of price perspective. But we can see it's mostly bearish, but generally sideways, right? This is fairly uncommon for VIX just to be, you know, in this weird state, right? And generally speaking, when markets thin out, like we see over here, thin market sideways, then the next big moves start to pop off. And so I've been saying to the masters over the last little bit that we're waiting for this next big buy move, this next big corrective move towards the top side is what we're waiting for. And so the move that I'm potentially waiting for, which I see being potentially the trade of August that could materialize over the next week, is that this move needs to come to some sort of correction. This is what I'm hoping for. Right. Earlier today, and the masters have been absolutely amazing in obviously speaking and identifying some of these things, have been obviously saying, hey, this is here, this is there, and I've sent through different trades into the masters group and screenshots of what it is I'm taking and or buying. I don't know what the total pip count is. I think we should be hovering in the region of, I mean, today's buy on its own should be in the region, quick math, I think about $50 at a 0.01, so we're looking at about 500 pips on today's move. Earlier on, I don't know, it's moved obviously substantially now, so we could be sitting at about 600-700 pips, so certainly well over 1,500 pips for this weekend banked on VIX alone. But let's ignore that. Let's just look at what she's doing now and what the next state of market's going to be. So we can see what's happening. It's thinning down, we've got some price action, we've got this breakout towards the downside. Now the question is, what's busy happening? Now we've got this diagonal from a support perspective, 1, 2, 3, and you also start to see, once we connect the dots here, you're going to start to see we've got a beautiful price action setup here that is going to align something like that. Now, many people immediately always question, Dane, why do you do that? Why do you cut that section of the market off? And this is just pure experience that tells me, all right, you know, that there is the manipulation part, or potentially a bull trap, right? So markets break through a level temporarily, everyone thinks it's going up, and then end up buying it, right? Then it pulls back down, everybody who's bought it is obviously stopped out, and then the next real movement happens. Now, two reasons why I can identify that straightforward. Always look for what happened before the next big move, right? You see nice healthy candles here, nice beautiful candles here. If this one here represents 700 pips or so, then this over here is probably well in excess of 1,500 pips, almost 2,000 pips for that day. So again, after a bear or bull trap, we then see those nice big moves because the market's cleared out some of that liquid, it's cleared out some of that demand, taken out a bunch of stop losses for long positions or buy positions, and then the real move, which is the big sell, comes in hand. In addition to that, when we start dropping down to smaller time frames, you're going to see what I mean. Can you see it over there now? Right, so we have a nice market structure, and we can tidy this up further if we wanted to. It's going to be something like that. So we've got nice clean market structure up to the point. There we go. And then at some point that obviously just breaks and falls apart. I'm just going to draw that there so we have access. There we go. So there you can see it, and you can see that false move gets under, attempts to retest, and then ultimately starts to fall immediately once that retest happens. So this is now the new market structure that VIX has created, and this is what we're going to be following in terms of our setup. And this is also going to help us to determine where we would potentially take profits, because obviously it's already started to run, right? We called out a buy, I think this morning sometime. Everybody that was in that buy, everybody should be in profit. I had a bigger buy, a smaller buy, took some of my profit already, and I've got a smaller guy that will just continue to run as we go. And I'm going to show you why I'm positioning a take profit in this region, because this will essentially become our Fibonacci levels. And I'll show you as an example a small trade, right? Let's see, a 0.03 for this particular trade is going to, any position at that level is going to yield plus minus 3,500 pips profit towards the top of this market. Now, how do we know that's the goal, where the market will get to, right? Simply, we utilize our Fibonacci retracement tool, right? So we know that's the impulse. Impulse must correct. Where will the impulse correct to? The 61.8, which will then correlate with where our TP sits and where our new market structure sits, right? I don't think we'll hit the 78.6 because that's cross or through this market structure, but potentially what may end up happening is we'll hit the 61.8, pull back down to the 50% fib level, and remember that then now means we're above this ranging structure. Then that might be enough to then break through and then start the next set of ranges. Now again, if this here alone is 3,500 pips, then the balance over here is probably sitting around 4,000 pips. So here's 7,500 pips in this next move, which is why I've said I believe this is potentially going to be the trade that will frame August, right? From a setup perspective. But in any event, let's go a little bit deeper. So if you didn't look for this trade merely off the buy setup or the three touches or three market bottoms here off the diagonal, then let's start diving deeper to understand what's busy happening here. So I'm going to drop down to an hour, which is what I'm on at the moment. And we sent a screenshot into the group that looked a little bit more aggressive. It looked something like this. Something like that is what we were originally basing our buys and sells off of, right? I think you guys will remember I also cut this market structure up into pieces, something of that nature there. So this morning I called out a sell, right? I believe and you guys can correct me, I think I called out a sell at the 305 level, 305,000 flats. came back down, made a deeper support, which is obviously coincides with that trend line. That's where we bought, and now she's obviously doing her thing towards the top side. But let's say you missed that. What else can we expect? What else can we potentially look for from a trade perspective? So let's see if there's any additional market structure we can lean on to serve as like proper confirmation. So there would have been the original market structure, right? I'm going to draw this one in a different color. Is that blue visible? I think it is. Oh, what blue it was there. Okay, so that's that original market structure. Now, the fact that we've broken out, come back for that retest, found a deeper level of support once again, right, and then taken off, that gives me quite a lot of confidence that we are on the right track here. Now, what if you've missed this trade, right? Now, masters, you know the times I've given you where VIX turns around based on certain dates and times, and obviously if that happens this evening, I'll send you a notification in the group when that turn is going to happen. But ultimately we need to now see, can we start making higher highs? Because at this point we are at the high we saw last night this time, right? That there's a spike there. I'll zoom in really quickly. That spike over there. So we need to see, are we going to get through that spike? If we do, great. Then we'll start to then see a new market structure, play out, and who knows what it may end up being. We may start to see something, depending where that last touch ends up being. Let's say it's there, we will then correct down to the known whatever that level is. So wherever this impulse ends, right? Let's say it ends all the way up here. We will be able to measure the 61.8, and then if that touch happens, we've got 1, 2, we've got now market structure playing out, and then we will start to utilize pullback trading to get into this trade. So if you've missed it, if you miss any big move, right, never worry, because and again, that's why we teach in terms of my education system. One of the biggest fears that people have is the fear of missing out. The reality, in most cases, it's better to let the big move happen, right? Let that impulse happen and then catch it when it corrects. So it moves, gives a definitive stop in that market, corrects to a known level, map the market structure, and then get in on the correction. This is what we call pullback trading, right? People say pullback trading strategies. It's not a strategy. If you call pullback trading a strategy, you're a moron, and you should go play in traffic. Your life will be better served in full-on rush hour traffic. That's not a strategy, it's a technique to enter, and even then you require a bigger strategy to set the precedence in terms of how you obviously get in. So anytime you see me calling out a trade and I'm in it and there's profit, or somebody else is showing profit, don't just jump in the trade, guys. Don't feel an eagerness or a need to jump in, or that you're scared. Let it go, let it do its thing, right? You're going to have opportunities to move on. So in terms of wrapping up this VIX situation, we need to see what happens here. If we don't, right, we can already see that from a sideways structure, we've got all the things we need here. We've got the breakout of this, wedge type of structure, and this is great because, it's a bearish market. You could have sold here at any point and made your money, but we've now broken out of that, come back for the retest, made one last retest, deeper retest against the same what is now support, which is once, from a diagonal perspective, a resistance, and also it's a double support or double resistance, right? And this is where supports and resistances converge to the same point, and these are also sometimes referred to as pivot points that we utilize where multiple levels converge at one level, and this is a pivotal moment in the market where we start to see these reversal techniques, right? So if you didn't catch that by us, let it be wherever that end is going to be, and most of you guys know VIX is obviously traded better on a small time frame, because obviously on a 30-minute time frame, VIX will do the same pip counts as what you'll see in half a day. VIX will do what gold does in a week and what Forex does in a month, right? So if you're just trading Forex and that's where you've started, boom, that's perfect. But this is why I prefer VIX, because an hour of my time in the VIX market is the same as me spending, you know, a week in the FX markets, right? Just from a pip account perspective. Okay, so let's map this out in terms of what could end up happening here. Oh, okay, so we can do a couple things now. Let's have a look here. That little dot's not going to go anywhere. It's going to irritate me. All right, so we obviously need to know at what point is this correction going to stop. Now, in a normal case situation, we would be able to use a retracement tool, figure out where the retracement ended, and then we could use an expansion tool to map out where the next goals would be. Where could we see price heading and or achieving, or whatever the case may be. But again, because this is a new state of market, have a look here. Impulse, correction. Impulse, correction. Impulse, the correction is greater than the impulse at this stage, telling us it's a new state of market. So we need the new impulse to finish. We can then measure the correction, and then once we've got that first correction, we are off to the races, because then we can obviously utilize an expansion tool to mark out all of the next TP levels. So let's simulate that, right? I think that's pretty cool. It's an opportunity to kind of so Josh, just double check there. The stream bot has just hit you for, it censored something you've said, but if it does it again, it might kick you out the stream or ban you, right? I think it's like a 1-day ban or 2-day ban or something, or actually it says permanently banned. I don't know how that works. I didn't set it up. So let's simulate that, right? And I think it's just a good learning opportunity. We may end up getting something like this, right? Completely possible, completely plausible. Alternatively, we may get something a little bit more aggressive, where price comes, let's say, wherever, right? Obviously, we need to know where price is going to stop in order to map out where it could potentially go. Once we've got that, we will then, you know, be able to simulate what it'll end up doing. I'm just doing this on an hourly time frame, and let's say price makes it to any, you know, point here in this market. Let's say it makes it up to 309,000 flats, right? Once we've got that, we are sorted. So I'm just going to draw it as if it did that. So let's say price gets up to 309,000, and that's the end of this next impulse. Now we're sorted because we have the new impulse, right? It may also be something that happens like that. Like, we've got to consider this range or these resistance levels. So 309,000, let's say it reaches 309,000 tonight or early tomorrow morning, and that impulse starts to correct. We would be able to map that also FYI on a 5-minute time frame. Here's a 5-minute time frame. So here's the bull market, and this is for anybody that is currently trading VIX. If you're worrying about your profits or securing your profits, this is going to be the market structure for VIX over the next however long. So on a 5-minute time frame, VIX breaks the structure, it may start correcting. So I'm hoping this gets up to that 109,000, whatever the case may be. But let's go back to our story here. Let's go back to a 30 minutes. So we get up to 109,000. That's the new impulse of the new state of market, right? We've been in a bear move this whole time. We're looking for this next state of market. We do need to overcome this resistance. But if we make this impulse to 109,000, we can expect then a corrective move that we can map out. Let's measure 109,000, and wherever that ends up coming to, right? We've got our 61.8, we've got a bunch of different things here that can add value to us. And then we will look for the retracement or corrective move back to, let's say, 61.8 or even 78.6 if it moves quick enough. Once we've got that, we are sorted. We've got the pullback. We can re-enter nice and deep with the new market structure that's played out, and that is essentially pullback trading with brains, right? This is pullback trading in 2021 with brains. Joshua offended the bot. I don't know what he said. Joshua, tell us what you said without telling us what you said. I don't know. Can you do that? I'm not sure. For glutimus maximus, it's either butts or ass, or yeah, I think it's butts. I don't know. Glutimus maximus is your butt, right? I I'll be pretty disappointed in myself if that's not, if I don't know what that is. So there's VIX. Is everybody on the same page? Everybody understanding? Masters, I'm going to be saving this setup for you guys. I'm going to be cleaning them up. So I'm not going to be sending my setups just as they are. I'm going to tidy them up. I'm going to spend a little bit more time tweaking the exact moments of these trend lines, just to make sure they're perfect. Oh, sorry. What I was busy saying was, once we've got that corrective move mapped out, right? So let's say markets do come down to the 78.6. Now we are sorted, because what we can then do is we can then utilize our Fibonacci expansion tool to then map out every other level we could potentially get, right? So let's say they make up to 300 and whatever, 309,000. And then we have our pullback to the 78.6. Now our Fibonacci expansion tool will give us all of the levels that we will then achieve, you know, as the next TP, whatever the case may be. And so that's where we're going to obviously set up additional trades. So once we look for that buy opportunity or for that level, then we are good to go. In addition to that, everybody asked about head and shoulders. We may see an inverse head and shoulders formation here, where we have a left shoulder, right shoulder. Well, inverse, if this is really inverse, this is technically the right shoulder. That's technically the left shoulder. So right shoulder, head, left shoulder, and that'll be the reversal point. So again, that's why I don't like head and shoulders, because everybody wants to call these things different things. They're uncles, grannies, nephews, torso. Like, just read the price action. The price action is showing you what it is, right? Call it what you want. So that's where we will utilize expansion tool to understand where we're going to go to from a price perspective. But again, if you're in the VIX trade, guys, and you're a master student, well done. You've banked some money for the weekend. In actual fact, right, if you're a master student, right, you've paid your master's fee in 1 week for the whole month, or 1 weekend for the whole month, right? If you're trading at 0.01, you should have made at least $100, 150 US this weekend, and that pays for your fee for next month. You've paid for September already, August, September, yeah, so well done. If you didn't, I don't know what you're doing, because you should have. Sounds like a Gladiator movie name. Now I'll film adjust as Glutimus Maximus. Okay, so Glutimus Maximus. Okay, so that's VIX 75. Are we all on the same page? In terms of my DVDM markets students inside the DVDM markets groups, are we all on the same page? If we are, please just give me a thumbs up, give me a comment there, tell me we are on the same page, and I can move over onto something like XAUSD. If you were listening carefully, you would have been given a tip how to get short should this thing start to correct, right? So again, maybe I'll just state it. If we break 5 minutes in terms of that very perfect trend that's there, and I'll show you again just as a bonus. I love you guys. And what do you want me to say? What do you want me to do? I can't leave you out in the cold. I've got to show you what's busy going on. Again, that little 5 minute setup there. Again, remember, there is exceptions, right? So I generally would maybe draw in those exceptions, a little something like that. Okay. So you've just got them included. And there you go. If we break that on 5 minutes, then you know you can potentially look for that short. But you can see how this is the impulse and the downside is the correction. Anyway, that's just a bonus tip there. But if you're all on the same page, then please let me know, and then we are good to go. Okay, so for this one, guys, really quickly, I'm gonna do a quick break. I'm gonna do a 5 minute break. Just for 5 minutes. I'll leave the background going on. I'm gonna get something to drink and then change the batteries just in case, because the next one, I think we're going to jump into Bitcoin, we'll jump into gold, and we're going to jump into Nasdaq. We'll take another break, and then we'll jump into some Forex. We'll get into some dollar index, and then we're going to wrap all that up in terms of what I'll rank, which trades I think are going to be the best, and what I'm going to be focusing on for the week. Masters, we will be trading some of those things tomorrow. I'll be sending out the actual trade opportunities tomorrow, Tuesday, and then obviously everybody else, I'll see you on Wednesday for that live setup. So I'm going to do a 5 minute break, so you guys are welcome to go and do whatever your heart desires, and I'll see you guys back in literally less than 5 minutes. So yeah, good to go, and I'll see you guys now. I'll leave you with some good music, and I'll see you guys in a second. Okay, beautiful. Okay, everybody on the same page, same page, same page, same page, same page, same page. Let's see here, we are on the same page, same page, same page, but there's only like 10 people on the same page, so it means there's like 20 other people that are lost and completely don't know what's going on. So I'm more worried about the 20 people who are lost. So if you're not on the same page, there's a problem. Or you're not commenting, or you're a monitoring spirit. We know those things. Anyways, guys, I see there's a couple people who aren't subscribed. If you are not subscribed, hit that subscribe button. When I go live, you never miss it if it's a public broadcast. Okay. So what do you guys want to do next? I need a vote quick. Do we want gold? Do we want Nasdaq? Do we want Bitcoin? Do we want dollar index? Do we want USD Zara, GPJPY, or USD CHF? Let me know, and then whoever says whatever the quickest, that's where we're going to jump into. That's where we're going to go. I'll give you guys a second just to do your vote thing. Joshua knows what a monitoring spirit is. Hi, yes. Dollar index will be the start, but I don't want it to be a creative bias. I want to look at the instruments or assets without any bias. So dollar index, and just to add it in there, guys, even though we utilize the dollar index to look at things, specifically when we're looking at the start of a story, right? Super important, no bias. No bias means no fundamentals. So you're not expecting, you know, the GDP of a country releasing tomorrow. You're not expecting or having any external bias. A dollar index will present external bias. So I generally, in the inception of things, I like to leave it towards the end. Does that confirm what it is we're seeing from a price action perspective? Okay, it can also work both ways, right? You can also then be swayed to look at the dollar index a particular way, but rather instrument on instrument basis, and that will give you just a better, the dollar index confirms that, then the fundamentals confirm that, and the sentimentals then confirm the bigger picture. Oh, would you guys be interested? Quick votes. Actually, I want to see who shared this thing. If we got enough shares on this thing, what I'll do is I will maybe go through the COTS report data for last week, which was released on Friday. If there's enough shares, so commitment of traders reports, if there's enough shares, so we got 1, 2, 3 votes for Nasdaq, and 1, 2, 3, 4 for gold. So it seems like gold's going to be where we need to be. Okay, let's get into it. So, I'd say my ear subs are liking the tunes. Okay, so let's go through something quite cool, just as a bonus. If you're not a masters, you might not know what is going on, but this is a benefit for my masters because it is something I'm supposed to be doing with you guys. So let's have a look here. Okay, this is commitments of traders, all of US future positions. Futures are basically the same as spot trading, right? It's a position taken at a later point in time to say price will be this by that time. And futures trading is something I'm going to get into a little bit more with masters in the next couple seasons, diversifying what kind of options they have. Options and futures, right? It's excuse the pun there. So looking at the report is dated 17th of August, right? So this information is relevant as of Tuesday last week. So for those of you who know, the commitment of traders reports released the data is relevant of Tuesday and released in the US on Friday evening. That is why when you go and have a look at the fundamentals, you'll sometimes see CFTC gold, CFTC this, CFTC that. That is the part of the commitment of traders if you're looking at things like TradingView. So have a look at this, really, really cool stuff, right? Let's just see here. Okay, so if we have a look here, we've taken a little bit of a different report for this time around. So dealer intermediary, right? We're looking at 29,000 contracts long, 80,000 contracts short, right? And this is on the Canadian dollar. So Canadian dollar on all positions in the US. On the dealer side, we're looking at 29,000 short, 80,000 long. So we're looking at, you know, quite a big discrepancy, almost double long. Double short as what people are long. So dealers are short here. Where asset manager institutional funds, right, are long and only very small amount short here. The thing to take from this is here, there's something hidden here, right? Other non-reportables. Okay, non-reportables, and these are sometimes what we call icebergs, right? So these are future positions that you only see a very small portion of it, and they only activate the general position once certain metrics are looked at. But the important part is the unreported, right? In terms of long versus short, the unreported, right? 16,000 long. So we've got leveraged funds, right? Leveraged funds generally are your hedged positions, right? Hedging long and short. Hedged will generally, in most cases, not all cases, in most cases, be a 50-50 unless they are heavy long or heavy short. The hedge may be in one side, right, or one direction. But what I want you to have a look here is dealers, intermediary, these are like generally brokers, asset manager institutionals, where you want to pay attention to. What we can see here is they know something that the rest of the people don't, right? We've got 42,000 contracts long and only 28,000 contracts short, and then we've got unreported another 16,000 contracts long. So at this point, dumb money, right, is short on CAD, right? So if you look at USD CAD at this point, immediate term, I can tell you without even looking at the chart, is probably in like some sort of small bullish channel or small bullish move. But the institutional, the smart money, is looking at a long-term sell. Now, I must state also, these reports are snapshots in time, and what really is most important is the changes in position from the last report. So what you're looking for is a swing of smart money going, we were doing this, we're now doing that. So just if someone can take down notes for me really quickly. Institutional, we're looking at long on CAD, right, in terms of just general bias. Swiss franc, we are looking at short on the Swiss franc. Again, we see a discrepancy, 12,000 on the dealer intermediary. We call it sometimes retail money, right? So retail positions are 12,000 long and 5 short. So immediate market structure you'll probably see on the CHF is we are immediately long. Short trend, retail traders are really good at spotting short trends, but really bad at understanding the story of price, as I've taught you guys in part 7 of the 8-part series, right? If you don't know what I'm talking about, go over to my YouTube channel, which you should be watching me on right now, and start your course. It's free. I teach you about all these things already. Not this is part of masters. I'm just taking positions and stock of where what is. So short, the total for CHF is we're looking for short. Non-reportables don't back that up, but in general, smart money has got most of their contracts in a short position. Pound is fairly balanced, whilst, you know, so this is going to be interesting. We need to keep an eye on GBP because we have an alignment here of retail money mostly short and smart money also mostly short. Okay, and again, that's why we've got a bigger leveraged fund or bigger hedge which is sitting long, right? So the hedge is in case things go long. That's what the hedge is set up for. So this is going to be interesting. Pound GBP question mark. Why is there so many contracts short? We need to investigate that. That's going to come through on the price action, which will then give us a better understanding of what's going on here. Japanese yen. Wow. Okay. Japanese yen retail money is massively long, while institutional money is short, right? So this is generally where we like kind of see these things. So for masters, I'll be giving you guys a copy of this report every weekend, specifically every Monday. But what I'm also going to be doing is I'm going to be summarizing these reports for you to take out the mess. It's not just as simple as long and short. You'll see from the 1st of September, the master's program, as well as all the other programs, are going to be stepping up 100-fold. I'm bringing in some real amazing talent within the program. Outside of the grandmasters, we're going to be bringing in some talent within the program to take all this information, the things that I do, and deliver it into your hands in a usable manner, summarized manner. So what I'll be doing every weekend for masters, I'll be summarizing this data with the price action, with the screenshots, with all that, and basically be basing my positions and an explanation as to why we do what we do in that particular manner. So in terms of your question, Hein, it'll be weekly. I'll be giving you guys a summary and a breakdown of what's busy going on, and you've just answered weekly if you're understanding right, and you are on the money right there. So yen summary here is institutional or smart money is shorts. Let's just see, shorts on the yen, correct. Euro, quick summary. Retail money is short, so euro is probably doing not so great at the moment, whilst smart money is massively long. With any sort of hedge, their hedge is, so generally whatever the institutional money is doing, they generally are the biggest hedge. So they'll obviously in most cases have a hedge in the opposite direction. Non-reportables, they've also got another just shy of 70,000 contracts that they can add onto their long position that'll tip the scale over what's busy going on here, right? And that's what happens is you've got retail money moving in one direction, and all institutional money is doing is adding pressure to cause that tipping point. So if retail money is buying something up, then you see this massive reversal as soon as institutional money is, it's demand and supply, right? At this particular point, they create the demand and supply through the different adding and taking away of contracts. This has also been called the market maker strategy, which we obviously deal with in terms of practical price action. Dumping supply in the market makes something cheaper, so letting go of your positions generally makes something cheaper. Price falls. As it falls, they buy up those contracts, and as they've bought those contracts up, supply has been reduced, thus supply and demand. Less supply means higher pricing, so as they buy up these contracts, it makes sorry, I smashed my mic, makes something more valuable, and price moves up. That's how market structure is manipulated, if you want to call it that, but we read that through straightforward price action, if that's making any sense. Maybe I'm going too deep for an open session here. With the data changed massively week from week, answering Josh's question, he's looking at hot data, not introducing bias. So you've got to look at what was, right? And remember, it's a week old, so there is a little bit of bias, but you want to look at what was. This is what you would generally do on a spreadsheet and go Euro FX institutional long question mark. The reason why you need to have that in the back of your mind is that if we are at the top of a bull run, right, it will essentially tell us that there's a tipping point at some points that we need to be aware of. Not that we need to follow institutional money, because remember, if you follow institutional money, there's a saying that goes, markets can be in chaos a lot longer than you can be solvent or sane, right? So markets can push up, and even though institutional money is adding short positions, they know where their tipping scale is. We just need to be aware of when it changes. So this helps nothing in terms of entry. This helps mostly in terms of bigger plans, bigger investment positions, right? Short-term trades, scalps, day trades means nothing. Bigger time, that's obviously important. This is something that sets us up for the bigger view for the end of August, potentially even September. That's where its biggest use comes in. Okay, just to obviously address that to Hein's question, does it change massively week on week? Yes. And so the change week on week is what we are looking for, not necessarily just the immediate on the point, a little bit of information. But I know this is going to scare a lot of people. Yeah. Anyway. So Euro GBP, they've got some setups there. I don't like looking at Euro GBP or any of the cross pair setups. I like it looking at the individual assets. Australian dollar, retail massively long, and institutional smart money is short. So I hope somebody's taking notes of this, if possible, please, because I'm going to ask somebody to remind me what was this, what was that. And you need to just obviously Mexican peso, not worth trading. Brazilian real, not worth trading. New Zealand dollar, institutional money is short, and that lines up with retail money. So question mark on NZD. South African rand is in half, right? We've got institutional retail money, right? So dumb money short, and then we've got at this point in time, we've got institutional that's pretty much stuck, whilst we've got a pending leveraged fund here, or a hedge that's sitting with a bit of a long position that they can potentially jump in on, right? So we just got to watch out for this one and figure out at the end of when we're doing the fundamentals, where does this tie in? Not necessary, not necessary, not necessary, not necessary. Okay, so S&P 500, nobody's asked for S&P 500, but we will obviously look at it. At this point in time, we see that retail money is short and smart money is massively long, with a 50-50 hedge and a little bit of a short unreported situation there. So smart money long, dumb money short. Okay, so Nasdaq US 100 in terms of the consolidated version, and this is only, and again, all of this data is only data passing through the Chicago Mercantile Exchange, right? So there's different exchanges in the US. This is only data that goes through that. It's generally similar, right? So it's very rare you'll find one exchange is giving completely, one set of data and the other one's completely opposite. They generally are in the same direction, and so some people who take this very, very seriously in terms of the data, remember it's old data, so it's like looking at the past from analysis perspective. Great for analysis, but really doesn't help a ton into moving forward. Okay, so yeah, okay, if anybody else is, if Leonie's in here, Leonie, please, if you can just take notes in terms of what's being said. Nasdaq, US 100, retail money long, and institutional money or smart money long, right? And that's just Nasdaq, right? Leverage funds, there's a hedge for 16,000 positions short, but everything else indicates long there. And I mean, that's Nasdaq, right? That's S&P, right? It's just you're going to struggle to short that particular market because it really does really well long term. Treasury bonds, not important. Euro dollars, let's go. I think that's the end. We should have Bitcoin in here somewhere as well. There we go. Bitcoin, in terms of reference, we've got smart money long and we've got retail money long, which is perfectly cool. Guys, I think we're going to have a really cool analysis session on Bitcoin as well. Micro, we've got Ether, dollar index, retail saying short, smart money saying long, right? So remember this. VIX futures, not the same VIX that we are trading. We're trading VIX 75, which is a pure synthetic. Retail saying long, and we're also seeing massive long on institutional money. So they're looking at increased volatility. That also may tie in on the traditional VIX or volatility index. We see that when volatility increases, there's a fear in a particular market, as opposed to doesn't necessarily mean that S&P has to fall, but just a fear base on the confidence of investing in a particular market. That's the normal volatility index, which is not this VIX 75 that I trade, which is obviously a pure synthetic. It has a bunch of different components that get chucked into it, and it really works well, so don't have any bias over there. So there we go. That's pretty cool. That's a bonus ad. That's something that I will generally only deal with on the master side, but again, from the 1st of September, I'm increasing the capacity of all the support structures for every single one of you, and these things will end up being summarized with screenshots, with outlooks, with a message from me, tips and all these other kind of things. So that's gonna be something pretty cool. And I do believe that we agreed on gold to start off with, so I think let's get into it. Okay, so let's get our template out here. Let's just use one of the naked templates. So we're gonna take okay, so we'll take a break at 8:45, right? Just somebody remind me, just say take a break, otherwise I forget and then I get tired and I get grumpy, and you guys know how that goes. Grumpy Dane just ends the stream like same time. Okay, so we've got gold at the moment on a daily time frame. This data goes back for this particular chart and setup. In a normal day where trading when gold is open, which gold will open up this evening, if you're closing a chart and reopening, specifically on weekends, what sometimes will also happen, depending on your broker, depending on how much cash data they've allocated and how often that polling cycle is for offline data, you may find your chart won't move, or you're only going to get a limited amount of data. When markets reopen and you're on a bigger time frame, it will fill in the blanks for you, okay? In some cases it doesn't, and you're stuck with, you know, limited amount of data. So let's look at the data we've got, right? That's the data we've got for gold at the moment. And what do we see here, right? We see a little bit of a bull impulse here. We see, you know, markets make these impulses, come down and correct. This one corrected to the 61.8, so that's cool to know. Let's see this move over here. We've got a move here that came all the way down to that 88.2. Beautiful, brilliant, amazing, but we are obviously aware of that market structure there. So I'm going to leave this fib retracement in place just for now, okay? Just for now. And what I'm also going to do on this one is I'm just going to mark off the areas where the impulse happened, as well as I'm going to mark off where the correction happened, right? So 88.2, and I'll show you why in a second. I'm going to delete that that retracement tool, because I'm going to show you just off the gate how I'm going to use this and how this will potentially help us. Now I'm going to use my Fibonacci expansion tool, and click there, and then I'm going to drag the actual tool back down to where the retracement happened. So it's 88.2, right? We know that. There's the 88.2 somewhere down there. This is going to give us some of our levels moving forward in terms of moving up. If we continue to see gold move up, we're just looking at the price action. We don't care about anything else at this point in time. What else can we see here? We can also see fairly clearly that gold was in some sort of channel of some sort here. Oh, and also just to state, this is a weekly, right? This is a weekly time frame. Anybody that is wondering. So we can see we're in this nice channel break up, come down, retest. That obviously hit the channel, went through this diagonal with the limited data we've got. It's hit this diagonal, known Fibonacci level, and moved back up. So this is where we need to be curious in terms of what's happening now. So let's drop in one more day. Does all of this tie up the way we thought it would? Let's just double check. Okay, my diagonal is missing. I don't know if it was only visible on a weekly. Let's just double check. It does say all time frames, but it is visible, just missing on a weekly. So let's just redraw it then, maybe. I don't know. Something of that nature. Okay. And then we can also start to see, we also in a new, like, you know, another version of that's potentially moving a little bit down. So let's map that out as well. Let's just drop to a 4 hour. Let's just see what else we're seeing. Okay, so the one price action thing I'm seeing here, just from a perspective thing here, is I'm seeing this pennant here. I'm just going to zoom in. Right, so I'm getting a little bit of the flagpole sort of formation, right? And then I'm starting to see a little bit of this guy over here, and I think we might have spoken about this last week as a potential outcome, but we're right at that apex now, right? Now we know that a pennant formation generally is a continuation of whatever the flagpole was, right? So if it's a impulse, then you know that consolidation or that symmetrical triangle, we're generally going to look for a continuation of that, right? But this market hasn't yet opened up, so we're not yet going to make any assumptions. And then obviously we can look at taking this market high, and then we'll have to go in and just get a little bit more data as to where that might end up being in terms of this. Look, I always like it when it works out where markets just have a really good parallel. In this case, this line that we're seeing dissect through here, for me, this doesn't fit perfectly, right? I think it was maybe something like that. This new sideways setup we're looking at is something like that, okay? And this then is more of a parallel for me, telling me we have a little bit more meat in the bone before we hit any sort of technical resistance. At the same time, when we look at our Fibonacci expansion ratios that we've obviously just drawn out, these will be, and I'm just going to mark them out, I'm going to delete them again afterwards, but these are then, you know, some of the next technical support and resistance levels. That guy there and that guy there. So these are going to be the next technical support / resistance levels that we need to overcome from expansion technique perspective. So there's a couple ways of treating this setup here, right? In terms of the state of the market, we are well aware here in this case, withstanding all other items, that just based on what we're seeing now, without looking at the dollar index, without looking at anything else, we can see that, you know, gold in this state is in a buy setup, right? So we're on a bull market. The trend is your friend. We can't trade against a bull market at this particular point, right? We've got to go with it. So with that being said, we have seen that on a weekly. We see that we've got a massive pin bar towards the downside. That's that guy over there, massive pin bar back up over diagonal support. So we are looking for long positions on gold without any other bias. We're looking at long positions on gold from an investment position, right? They're going to be scalps, there's going to be short opportunities, shorter stuff we can take advantage of. Let's just see here. Just want to read the messages. Tutu is asking, so do this news take place every week of the month? Every week of the month, because this month of August I see too many news that's taking place. Tutu, I don't know what you're speaking about. If you're speaking about the commitment of traders report, that's not news, that's just pure data. We're going to look at news a little bit later. It's not something that is dealt with in my academy, the COT data. It's something that's a little bit more advanced because you're taking in more levels of information, and so more information doesn't always mean better, right? Most people in the early stages, too much information is analysis paralysis, and you don't know what to do, you don't know what to trade. The most basic ways of trading is what I'm showing you now: price action, take the trade, have risk reward, set your psychology up, and go for it, right? Bringing in all these external data points really takes time that you can master. They don't influence your price action, and vice versa. Price action is king. I mean, if you want to see the data again, just take notes. Yeah, okay, I think I'm up to date with the comments. I just see there's a few comments I just wanted to address in case anybody is wondering. Okay, so we have a bias in terms of a buy on gold at this point for an investment position. Now we need to drill down. Okay, we can see that this massive channel we had moving here towards the downside broke back up, retest against this diagonal. Very similar situation to VIX, I would probably say, right? We got this move here, breakout, deeper retest. So just looking at VIX, right, similar kind of thing. We have a channel, a breakout, a deeper retest, and that's then the trigger point there. And now we are back above structure, but we're starting to show a pennant continuation that needs to tell us what it wants to do. All right, so this is what I foresee being the play here. We obviously have our Fibonacci expansion that's been derived by impulse corrective was the 88.2. We've deployed our expansion, and this is giving us the next levels we could potentially achieve moving forward, right, from a buy perspective. Pennant means continuation, so the likelihood is that should markets open, and we already are at the end of this pennant, like this pennant's pretty much formed, it's done and dusted, so depending where markets open, we could immediately break and smack resistance. But again, the trade here is not trying to buy the impulse, right? You want to wait for this thing to confirm what's busy happening. This diagonal, I do believe, is going to be the resistance that we can use, so we can buy into resistance as a small scalp, depending what ends up happening here. And then a breaking of this resistance would then trigger the bigger buy at play. Should this continuation or this pennant fail and we then move, remember again, price action formations are not written in stone, and many people will see a pennant and just go for it. It's meant to be, again, as I've taught you guys to read story of price, it's one word in the sentence. It's this may buy, right? If you see a pennant, a continuation pennant, or at least a bull continuation pennant, that you still require all the other tools in your arsenal to fully make that decision, right? And that doesn't mean just triggering a trade, it just means this is what may end up happening. Okay. And let's talk about why that is, right? I had someone comment something in the group the other day, oh, pennant this, pennant that, but why is a flag not? Let's talk about it. Let's think about it sensibly. And this is what trading is. Trading is about common sense. It's not about fancy words that people throw around to confuse you and make you pay, insane fees to just tell you simple things. Look at this market here. What is this market doing? This market's busy buying, right? So the bulls have had their turn. They've had their turn. Markets have reached a known level. You can see the resistance. It's clearly there, right? We've hit a level of resistance, and markets have now an opportunity. This is where the bulls have lost momentum, and this is where the bears or the sellers should be taking absolute advantage of this market. They should be taking absolute advantage of gold right now. But what we find is, we're in a situation where we're making higher lows, but also making lower highs. So we still see that there's a certain element of the bulls in control here, because why? A bull's job is to make higher lows. A bear's job is to make lower highs, right? To bring those highs ever so much lower. So this is a moment in time where the bears are supposed to be taking the pants off of the buyers, but they're failing to do that, creating an impulse, a market where that moves up with a symmetrical triangle, right? Lower lows, lower highs and higher lows, again meaning that the bears don't have it in them to drive this market further down, meaning the likelihood is you'll get a continuation, a second wind of bull buying activity, thus the market pushing further up. So it's not about the fancy word of a pennant continuation pattern. Like, nobody makes these things up just to, well, I suppose some people do. Some people make these things up just to sound smart. Ignore that rubbish. Look at what it's actually doing and reason in your head. Who are the participants? Remember, like I taught you guys in the academy, you got buyers and sellers in a particular market, right? What are the buyers trying to do? What are the sellers trying to do? And how does that reflect from a price formation perspective? Learn to read price. Ignore all the pennants and rubbish. It's just a way of identifying. Hope that's making sense, right? Yeah, anyway, fine. So ultimately, in terms of the scalp, because obviously gold is not moving yet, I do think we are at this is a fairly mature formation. If I have to tidy it up, I'll drop down to an hour. So let's get this thing nice and tidy so we are accurate. Let's see there. That is nice and tidy from my perspective, and that is nice and tidy. Okay, so we can also see that, this pennant isn't completely formed. There's still, from an hourly perspective, there's a couple hours in it, right? We know that a pennant generally starts the breakout closer to the apex. Apex means the point at which buyers and sellers are exhausted, and again, this is the seller's opportunity to make lower lows, right? They're failing, so that exhaustion means that the sellers have failed to do what they're going to do, and reaching that apex means that, you know, buyers will obviously take this thing to the next level. Yeah, anyway, all right, cool. So we obviously need this dollar, the markets to open up on gold. Depending on what happens here, two options, right? We break out of this pennant top side and break resistance. Anything above $1,797 to an ounce of gold, so 1797, we break above that. That's our next key level, key resistance, which is also going to coincide with this major diagonal. So a break of the 1790 mark is going to be big, or 97, but remember, 1800 flat is a psychological resistance, right, or support. Remember, as I've taught you, those big round numbers, those are technical resistances just because of the fact that they're these round numbers. Specifically on gold, go and look at all of the big round numbers, right? 1700, 1800, 1900, 2000. 2000, is there such a thing? So 1700, 1800, 1900, $2,000 to an ounce. You'll see those will be technical resistances. Is there a physical level there? No. This is human beings and crowd psychology reaching a level thinking, oh, this is a round number, there could be a retracement. Oh, this is a round number, this should be a buy. That's the only reason why these numbers exist. But the big play here is that should we hit this and break the technically $1,800 to an ounce of gold, this will become the new impulse move. Then there's a big investment position to go long on gold. Vice versa, we fail this pennant formation, and if we go down to $1,760 to an ounce of gold, if we break that support, then gold is dead in the water. Gold will continue to sell. Not only will it continue to sell, but we then have broken and failed to stay above this long-term diagonal and that level there. And then we're going to see a massive sellout on gold. And that means that gold could literally get back to, you know, $1,300 per ounce, somewhere in that region. So that is essentially the two scenarios, and those are the things that we would watch out for and play. So we've got scalps there, we've got day trades, and we've got big investment positions based on what ends up happening with this immediate structure on gold as we speak. So how could someone trade this, right? Very, very simple. This is where pending orders come in play, and you know what the opportunities are, you know what the potential outcomes are going to be. Based on those outcomes, you would set up a pending order to fully benefit from that outcome, right? So a break up of the pennants, as well as breaking and breaching 1,800 to an ounce of gold, right? What are we going to do there? It's a buy stop, right? So immediately once price goes through that level, we're going to buy it. We place our stop loss below the 1800 level, below what is now support, what in this particular case is resistance. Support goes below that, back into market structure. Inversely and oppositely, the pennant fails, we come down to $1,760 to an ounce. We then can have a sell stop below that at around about 1,750 with the stop loss back into structure above what would then be resistance, what is currently now support, and then you're good to go. In either direction, provided your stop loss is correct, you can capitalize on a big investment position on either direction, and the risk reward in these cases are going to be massive, right? In terms of the ratio. So you're probably going to end up looking at, and we can actually set up one together. I think let's set up one together just to look at how much potential this has or doesn't have. So let's look at let's set it up manually. So I'll work it out on a 0.01 because I know a lot of you guys have your smaller accounts. You obviously want to take advantage of that. And this will just help us with a pip count. Let's do a 0.1, right? From a pending order perspective. All right, 0.1. Let's start off with a buy stop. Buy stop. Let's say we utilize the diagonal. We know that the 1800 level is definitely where we want to be. Now, I get this question a lot, right? How does somebody tell, right, if there's a resistance level, how do you tell, right, how far of a tolerance to put in that level? So you see a resistance at 1800. Do you set your order at 1800 and your stop loss just below? How do you tell? Very, very simple. Go and test the market. Go and look at that 1800 level and look at how many times price is projected into it and how far it's projected through it. Take that as an average, and that will then be your case study to know, okay, when we've projected into this as resistance. Now remember, guys, when it's a different story when something is resistance or support. So don't go, all right, in the past it's gone through it by 70 pips, so going up, it can go up past it. Look at a case by case study, right? So have a look here in terms of what gold is currently done. When it is support, right, we go through that support level. In some cases, in this case over here, 1789, so almost $10, right? Almost $10 we projected through support, okay? But when it comes to resistance, have a look at how on point this thing is from a resistance perspective, right? Here it is going to resistance, goes to 1789, stops dead. 1797 stops dead. 1795 stops dead. 1794 stops dead. So when it's resistance, it's a dead stop. Same here with in the future. 1795 stops dead. So we can see that from a resistance perspective, it pretty much rejects, 1790, high 90s. But when it is support, it can go through that quite a bit, up to $10 from a support perspective. Okay, we will take a break directly after this. So let's just set up the buy stop here. Okay, so again, where do we want to buy? We can see that 1798 or 97 is the deepest it had gone. So if we look at a buy stop of 1800 flat, we're safe because we don't have past data that has gone to 1800 flat and not projected straight through, right? In most cases, it hasn't got there and rejected almost immediately. We break, then we dead. I don't know what that means. Let's refix that volume there. Again, then from a support stop loss perspective, we obviously need to draw to attention these spikes through. So once above and it's now support, we have projected down as low as 1790. So with spread, we have to take into account, we're going to look at about 1700 and let's just check here, 1788 I think it is, 1788. Now remember, we are going to be looking at this from a we can't place it, I apologize. So we can't place the pending purely because of the fact that the market is closed and cannot physically place that pending in the market. But I may still be awake by the time that ends up happening. And that would have been a situation something like this, where our entry is there. And I'll make our entry maybe dark blue, right? Our stop loss would have been there, and our take profit obviously is exponential because we break resistance and we are pretty much good to go to the races. So that's how we would set up something like that, which obviously we need to wait for markets to be open for. But it does seem like it's been about an hour and one of my batteries is going to die. So are we on the same page in terms of gold? Right, are we on the same page? Again, all of these charts I'm going to clean up, and I'll give the pending orders, the setups to my master students. But outside of that, are we on the same page? Is there an understanding? If I call out a gold buy on DVDM markets, which many of you are in, will you understand what that means? Jason's asking the question and then it happened. So yeah, I wasn't looking at that all too clearly. Just want to make sure we're all on the same page. If we are, then I'm going to proceed to take a quick break. I'd say about 5 minutes, and then I will be with you guys again in 5 minutes. So otherwise, sit back, keep the chat going. You're more than welcome to spam the chat. It gets me laughing when I get back. But yes, if we're on the same page, then we are good to go. And it's crazy, we've only analyzed 2 positions, right, in the space of 2 hours, right? So people want to do quick analysis, slap things around, and sure, I'm explaining things at the same time, but this is what it takes, right? It's not just taking a trade on a mobile. Sometimes we just are lucky and we can just smash it, but it's this investment in time into the markets that makes the difference between an Instagram trader, which there's a lot of them, and someone like me who, this is my livelihood. I can sort of do anything I want in life based off of this. Spam, do your thing. Okay, I'm going to see you guys in 2 seconds. Let's do a quick intermission, and then I'll see you guys in a second. Okay. Man, guys, I enjoy these things. This is like, it's sort of like doing your analysis, but in essence, just having you guys around as well to chat. It's all good. Knowing Han, you probably typed an essay and then it just got the bots like, cheers. Delete. So if you type a long message, rather type it in sentences, like type, hey, listen, hey, yeah, right, fine, thanks, and you know, you might have to just break it up. Rather spam. Spam is a lot better. Okay, and we are a talkative bunch. Okay. So what is the next thing we want to talk about? We've obviously spoken about gold. Sorry, the music's quite loud on my side, so you guys might be getting feedback through the mic, so turn that down. Okay, so what's next? We've obviously spoken about gold. We'll wait for that market to open, and then once it does obviously open, we'll have obviously a bit of time to play around there, get some of those pending orders set up. So we'll wait for that to open, and then I'll still be up a little bit later, and then I'll send that through to the masters, and you guys can yeah, the club one day. I'd say we have to hit the club one day. Okay, let's have a look what we're seeing. All right, so for the next one, I think we're going to open up trading view for this one. Let's just see. Okay, so I think we're going to go into Bitcoin because I know that was also one of the requests. So I'm opening up trading view. I've got trading view. Trading view's done some nice rebranding. I love their logo with this TV. I don't know if you guys have seen it. I don't know where I can bring up their logo. I'm in the way. There we go. Have a look here in the right hand corner. We've got like this TV. Very, very cool. Very, very slick. Okay, so I'm gonna open up Bitcoin chart. Oh, here's one of my other crazy ones. Let's start new. Boom, remove drawings. This is Bitcoin off of Coinbase's data. Let's go into a monthly view. Okay, so here's a monthly view. So obviously I'm hoping everybody knows the past, and I've done Bitcoin in the past. You can go search for one of my previous analysis if you're not familiar with Bitcoin, how it came about, how it got its valuation, how it got to where it got. If you don't know how that came about, go to one of my, I'm not reanalyzing every time the whole history of these things, but we're just going to look at it for what it is, and we can see Bitcoin, you know, has got a pretty good track record of impulsing. So impulsing, and then, you know, there's the impulse correcting down to a known level, and then the next impulse, so on and so forth. So Bitcoin's pretty good when it comes to that, right? Impulse, correction, and then obviously the next big impulse that obviously happened. So we got from the 20th of March or the 1st of March 2020, we got the last big impulse where Bitcoin ran from $6,000 to just shy of $65,000 a coin or a position, right? That came back down to a very known level that we are well aware of. I'm going to go down to a daily time frame on this one. So that came down to a well-known level of the 61.8, and that was at $30,000 a coin, which I think if you guys remember in the past analysis is where I said if you're going to buy Bitcoin, $30,000 a coin is where it's going to be, and it projected to $30,000. Worst case scenario, it projected 29,600, let's say. Okay, so pretty much in line with that, and again, that's just because it got to the 61.8 Fibonacci correction, but there's now something very interesting happening in this moment in time. I want you to have a look at all the places right from that point, and there was obviously price action we could have utilized even at that stage to build out, you know, that breakout setup. Again, a bit of a descending triangle formation happening, but have a look at that triangle failing to break out after the 70% mark, and ultimately, you know, it didn't. It got to the apex, and we know if a triangle progresses past or closer to that apex, it's generally dead and the next move has happened. But now just isolate what's happening over here. Can you guys see how beautifully, you know, Bitcoin is obviously respecting, I'm just going to zoom this in quite a bit, how Bitcoin's respecting, you know, the fib levels, or the technical resistance slash support levels. It's doing it perfectly. There's something very interesting that I want to show you in there. So let's get, for the time being, let's maybe just let this Fibonacci live in a slightly safer place. Let's let it live there. Okay, we can always get back to it or reflect back to it, but let's live its life over there. And let's just then focus on what's busy happening over here. I want to drop down for this particular setup. I want to drop down to 4 hours, and I want to show you something pretty cool that I'm just busy seeing. Okay, have a look at that. Okay, there we go. Now we can see that Bitcoin is in a really good trending setup here, a really good channel. But I want you to have a look at what's busy happening right now. Again, if you've missed the trade, if you aren't in Bitcoin, there's no need to panic, right? If you come back and have a look at those known levels or known fib levels in terms of that past or the past setup there, you can see that all the known levels we've broke through and then come back and used as support slash resistance, as these levels are. That's how it works, right? Having a look at where Bitcoin is currently at. Okay, so it's very, very likely then that we are in a position. I just want to double check if my fibs are perfectly on point. Just check here. I just want to confirm that all my levels are exact, because this is going to come down to a little bit of a science now. Okay, this is gonna be very, very cool. This is gonna be very interesting to essentially trade BTC over the next little bit. I do want you just to spot a little bit of a trend here. Now, remember, as you know, Bitcoin, for Bitcoin to get stronger, United States dollar is getting weaker and weaker. Just remember that as a side note, right? What I want to do is I want to just drop down to an hour here. Just want to get this support level proper and perfect. Is it not there? Okay. So again, this is just something over time with your eye you're going to start to learn in terms of adjustments. Right, most people are going to try and take that line from that point over there, but that's not the actual start of that market. That was a bear trap to get people go short. It'll take out their stop losses by, you know, obviously moving up and then continuing along its way. In addition to that, I'm just going to maybe do a 4 hour maybe. In addition to that, you'll see the way I've drawn it, these lines aren't parallel. Now, it doesn't have to be parallel, but I do like them to be parallel where possible. I'm generally looking for that symmetry as often as I physically can without making it so that it's, you know, showing me stuff that isn't actually there. You kind of want to make sure you're covering all the bases. Okay. That's good. I'm gonna set an alert there. Okay. All right, so this is what I see is busy happening with Bitcoin at this point, right? We can see that Bitcoin is currently in this channel, right? It's obviously, ideally, we want to be long on Bitcoin right now. The whole world's saying it. There's quite a bit of different reports through the different investment houses saying Bitcoin could, without a doubt, hit $100,000 a coin before the end of the year, okay? So, again, we know that there's a very high optimism that Bitcoin could get 100,000, which is double what its current value is at the moment. And so there's a big opportunity, right, to go long there. However, there is an immediate short opportunity that I believe Bitcoin may move and make some sort of short-term correction, right? Something like that, potentially spiking down to a known level. In this case, we're utilizing obviously old Fibo levels, which are dynamic support / resistances that we can see pretty clearly are marked out there. So I think the ideal play here on Bitcoin is that I would really like a buy in Bitcoin, albeit I don't want to take it where it is now, because we're sitting at $49,000 a coin and we could come back all the way to $44,000 a coin. That's a difference of about 5,000 US a coin, which is quite a few pips. I do think Bitcoin is going to make a bit of a correction. I would like to be a little bit greedy in the sense that we would like to see that push through this diagonal, as we've seen here, potentially trick a few people getting short, and then ultimately we catch it off that pullback. This will be a corrective move. Once we know where this is going to end, right? If this is going to end pretty much where it is now, and that is the total of that impulse, then what we would then end up doing is looking for entry in the region of the 88.2, which will also coincide with the trend line, but start taking buy positions on that 78.6 is where it could essentially start from a 78.6 perspective. So a Bitcoin buy at about 45,288 is, I think, the first potential trade opportunity here, and then a second deeper buy at 44,800 flat on the Bitcoin price, and that'll help us to then get a continuation of this long move, which we can see is now the new impulse top side. And again, for Bitcoin to crack $65,000 a coin, I think is going to be a no-brainer. Obviously, the bigger trade here is $100,000 plus. Now, obviously, a break of this formation would be very worrying for that to be an immediate or short-term objective. A break of this bull's trend would mean that we've got to then start to look for some shorts. Or at least capitalize on the corrective of this current impulse. But again, I do think the play is still a solid long-term position. Now, again, does this tie in with our COT data? Yes, it does, right? Everybody's long on Bitcoin right now, and there's no reason to doubt the valuation or the future valuation of this entity, of this particular commodity. It's done $65,000 before. A ton of tech is evolving around in this particular place, and it certainly has the legs to obviously go the long setup. Normally just look at my chart for a few minutes, looking at the best price action, not forcing it. Yes, okay. So that's Bitcoin. That's what I perceive is a very real trade opportunity, or very real reality. Again, mapping out, I am on a 4-hour. You can get more detail in an hour from exact entry point perspectives. And then again, like I said, I do believe that entry, that minimum entry, we can get an entry at 45,300, and then a deeper entry potentially 44,600, somewhere around about there. So those are two on Bitcoin I would be most interested in from a long perspective. I've got zero sell or short bias on Bitcoin right now, just based on what the price action is saying, and then further backed up on the COT data that we have no participants, both retail and so both dumb and smart money are long at this point. That is generally a worrying thing, because it just means that there's an opportunity for smart money to force, pump in enough short positions to obviously make the price go short. But it's just something to obviously be aware of at the end of the day. So that was the Bitcoin side. What other items that we have that people are interested in? Let's have a look here. And is everybody still following? I think we did have a coming up, Nasdaq was a big one. I think there was a big request for Nasdaq. Let me just check. Okay, so for this next Nasdaq one, I'm not going to even speak. I'm just going to analyze. Okay, so US 100 is a pretty cool trade here. There's a bunch happening here. This dives a little bit deeper into the masters, so I'm not going to explain it because we've got a bunch of different people here. So I generally would not go short on US 100, but the price action is just perfect on this, right? So we have a scallop formation, right? Markets are bending and turning here within a range. So we've got a pretty good range here, and in essence, In terms of that, we've got a pen, this scallop formation. A scallop is generally just a bending in price, where you don't make a high, you start to sort of make a triple top, whatever the case may be. In terms of that, we are in terms of this last projection, we've corrected up to 88.2. I do believe you guys remember my analysis. I do remember I called out a sell also at 88.2. So yes, in terms of NAS, US 100, should we get a stall out at the 15,100 level, right, I would seriously be looking for a short opportunity with my stop loss above the last area of resistance, and best case to have absolute certainty that this price is going to stay under this level. I would then look for a stop loss. Let's just check here. Yeah, 100%. I would look for a stop loss above the absolute market high, which is going to be 15,200 is where I would place my stop loss. So again, it's going to be a bit of a big stop loss because 88.2, we can see prices busy stalling out. We can drop in and obviously have a look at a little bit more detail. It's not giving us a flag. It's not giving us a pennant. It's not giving us any continuation pattern, but it's certainly telling us that markets are really struggling to get any higher here. Yes, 88.2 looks really good for that sell opportunity across that zone. It's definitely a strong support / resistance zone that we obviously have to be well aware of. Yeah, I mean, I really like it for a potential short. Let's see if we've got any more data, just drilling down a little bit closer and closer. Yeah, so I would, to trigger the sell, I would then look at maybe not that, but certainly something like that. So break of that structure, and you guys can also currently sort of see it as well. It's a very small, this is a 5 minutes. I generally don't like trading on such a small time frame, but you can generally see what is busy happening here from this particular perspective, that we have this ascending triangle that's kind of again failed to, you know, breakouts 50-70% mark. Again, the story of price here is that, you know, the bulls, essentially their job right now is to push this thing further. They're failing to do that, and we've reached the apex. Markets got very, very thin before close of markets on Friday, and this could trigger a massive then sell-off. So again, I wouldn't sell this thing off the gate or just by hitting the 88.2 fib retracement level. I would then wait for that trend line to break that I've just drawn now. So 5 minutes US 100, wait for that trend line to break, and then utilize that as a sell opportunity with your stop loss being above the last level, yeah, as a scalp. And then if you want the bigger trade opportunity and obviously a safer stop loss level, you then going to want to pursue trying to get at least above that maximum market high, or even above the 100% level if you want to be wrong with a less of a margin from a risk reward perspective. That's how I would play that one. Is that making sense to everybody? I'll just wait for everybody's comment there if it's making sense. Everybody's still with me. As soon as we go to YouTube, we haven't dropped one frame, like not one single frame. Not even a single frame. Yo, guys, VIX is a runner. VIX is thumping. Chill, I don't know how many pips is that then for VIX. Okay. So Paula, if you're still in here with us, if you can't comment, it means you don't have a YouTube account. Sorry, Vulcan's shouting at somebody or something. I see Paula in the main groups just saying she can't comment. So you just need to have a YouTube account. It's free, just FYI. So this will be an interesting one. Markets open, I want to have my eyes on this in terms of what is it doing. Okay, let's see. Okay, what else have we got here we want to do? I actually like the silent analysis, and then I obviously speak about it after the fact. Okay, so I'm gonna do the same thing with dollar index then. So enjoy the music, I'll explain it afterwards. You can watch my steps. Again, masters, this will be available to you to rewatch. And again, all my charts, all my templates will be sent to you with levels, tidied up, so on and so forth. May not necessarily be tonight because I can feel it's been a long day. Great weekend, long day. I don't know if I'll make it all the way to 12-1, whatever the case may be. But I will take time to obviously get those templates out to you. So for now, sit back. I'd like to say enjoy, I'm not sure. And I'm just going to do my thing on dollar index, and then I'll get back to you guys and explain why that is. Okay, so on the dollar index, we can definitely see we've got some room still to move to the top side. Just in terms of its market structure, dollar index starts to trend, can break out, can have a lot of falsities just because it has such a big weighting. There's so many external factors that are lying on it, right? The important thing to understand here is that in terms of the last move, we already made a higher high, right? That move we thought could correct or stop out. But remember, I think if you guys saw, we already breached the 88.2 last week when we saw that in terms of the corrective move here. So I've utilized an expansion tool, Fibonacci expansion, to see what are the next levels. We can see that that expansion tool gives us a lot of the support / resistance levels that we don't get from a corrective move in terms of where they may be. And so that's why I think the dollar index has a bit of meat on the bone to make it to the Fibonacci expansion level of 123.6% of the initial impulse, right? That's the first thing. The second thing, in terms of trying to frame out this, yeah, so again, we may find ourselves in a position where we may end up getting a rejection off of the Fib fan 61.8, right, which is what is clearly giving us a little bit of market structure here. Dollar index looks to me, just from an immediate point of view, specifically over the next couple trading days, we could expect the dollar index to lose value in relation to everything where it currently sits. We're failing the Fibonacci expansion level 88.2, which is the last 100% market high. We're below the Fib fan 61.8. Definitely has opportunity to lose value, specifically over the next few trading days. I don't think next couple trading weeks. Could be 2-3 trading days. 78.6 then has the legs momentum to make it up to the next expansion level. But again, this corrective move we're in is a corrective move. This whole thing is a corrective move, which is a greater sign of a sell-off, right? So correction to the top side, retracement to the top side is a bigger indication of an impulse towards the downside. So there's a bigger potential for the dollar to lose value, as we've seen. If you go back to sort of TradingView or something like that, dollar index, let's find it. You'll find that there is a bigger or higher probability opportunity for the dollar index, specifically on a bigger, like a month range. Dollar index has been losing money pretty much since 1986, right? Been losing a ton of value. It is what it is. There's opportunities available. I didn't see that there from the 8th. Let's just see if I've missed that. Oh, okay, so this only goes to 2017. Apparently there's some sort of diagonal support here, which we're pretty far away from at this particular moment in time. So yes, I think immediately from an immediate trade analysis perspective, I think we could see a weakening dollar over the next couple days. Specifically provided, and more likely, if you want a bit of a precise measurement there, if we fail to make it above, specifically on this particular dollar index, if we fail to get above 93.51 over the next trading day, so when US markets come into play at 1400 hours GMT +2 here in Southern Africa, if we fail over that trading day between 2 o'clock tomorrow and 2 o'clock Tuesday our time, which is one trading day in the US, we fail to get above that mark, we could see substantial weakness on the dollar over the next couple trading days. Now again, dollar and US 100 are unfortunately not linked. Wall Street and Main Street, as I've discussed before, are completely two separate matters. So the dollar decreasing in value does not mean the US needs to fall, but it does happen that these things do sometimes coincide. I think the bigger thing that we can see here or take away from this is that this certainly supports a Bitcoin buy bias, and it certainly would support our continuation on gold. That's the two big items I think it does definitely support from our perspective. Yeah, so I don't know if that makes sense to everybody. If it does, just let me know. Glad you guys are enjoying it. So Josh is saying we could do this every Sunday. So this is going to become a normal for masters. I want to be able to analyze with you guys freely, go deeper, go answer your questions without obviously diminishing the value or the value proposition within masters. Because in open environments, you know, we've got many people here who are not masters. And so going deeper and deeper, even just going into COTS and how that ties in may confuse many people. And that's not the purpose of this, of what I do. The purpose of what I do is to make it easier for people, not confuse them. We obviously do it at a very deep level. Most of these guys online are literally just drawing a trend line saying buy now without any further understanding of the markets. Okay, cool. I can see why that setup is looking the way it is. So Zara definitely has an opportunity. I know I've skipped my own rule here. I just want you to see what's happening on Zara. So we know from a bigger time frame, like Zara is tanking. Zara is in a very bad position. We've made these spikes. Apologies. 2016 we spiked out at 18 Rand to the dollar. Beginning April 2020 we spiked to 19 Rand 40 to the dollar, and we are obviously preparing for that next spike. Sorry, I'm gonna drink some stuff. But with that being said, where we are at the moment in terms from a daily perspective, right, we've got a nice little trend here. It's been good to us in identifying what's busy going on, but we are now at a position where we're going to hit a market, a pretty substantial resistance level on USD ZAR, and that is going to be a challenge to get over with any sort of doubts in the dollar right now. So that's going to be something we definitely want to keep our eyes on. It would have been great if that coincided. Let's just have a look how accurate we can get that. Oh, it does actually coincide. Okay. So it does definitely seem that this is some sort of major pivot point. There. Let's have a look here. Okay, so as I've obviously discussed with you guys previously, I was of the pretty strong opinion that the market bottom for USD ZAR was supposed to be that 14 Rand 50 mark, if you guys remember correctly. It didn't. There was a little bit of a bear trap placed here, and it got a little bit lower. We got to 13 Rand 34, the strongest point, which was the 4th of June this year. 13 Rand 35. ZAR's crazy overpriced, right? So we did eventually get out of that. We were held down by this diagonal. We got into this new state of market. We've now made our first little impulse out of this market, and we are obviously going to now hit the ceiling. And this is now obviously where we need to decide and obviously pay attention. What is ZAR going to do? So is it wisdom to immediately sell ZAR or go short on banking on the fact the South African rand will get stronger, United States dollar get weaker? No, not necessarily, right? So there's the channel from a parallel perspective. Again, I like parallels. I try not to force it, but where it is available, I will obviously consider it and take advantage of it. The tighter or closer market is the one that looks something like that. and that is sort of what we need to pay attention to now. So I do believe we will be able to go long on Zara again at some point. If this move has come to an end, we will then obviously look at where it will correct to. It'll more than likely be some sort of known diagonal, something around about there. And so an entry point at the 14 Rand 50 mark again is where I think I would personally want to get in. So I wouldn't want to get into it now as buy. Obviously we're at resistance, but provided this structure fails, then certainly I would look for a bigger play on the pullback side of things at that 1450 mark. I just want to see if there's any more obvious structures that will make themselves available to us. Okay, so if you wanted a strategy in terms of like getting in on it without, you know, losing the opportunity, then you would take advantage of this over here. For those of you who like to scalp, I generally don't unless it is VIX. You can isolate that side of the market. When that breaks, you can then potentially get short, or a break and retest of some level, something like that would be where you'd want to go and jump into that one short. So, and that's on a 30-minute time frame. You can really tighten it on a 15. I don't like trading Zara on a 15. Too many false moves, too many false signals there. But yeah, that's what I would potentially do on Zara. Yeah, and this sort of 1, 2, 3, 4. So third would have been a bit of manipulation. We didn't get it. Fourth we should be in the clear. And this bull move has pretty much been raging since the 4th of August. So let me just see how many trading days that is. Yeah, so I mean, we've been in a bull market here for, you know, 55 trading days. Correction down to some sort of known level, perfect, then continuation, but certainly the last impulse has lasted the last 12 trading days. So yeah, correction is in order. Again, this market structure supports a weakening dollar just from that perspective, so that definitely does tie up there in terms of our previous analysis. Yeah, is that making sense to everybody? It should be. Why do all the other monitoring spirits? How can there be so many people watching, so few commenting? So I think in future this will definitely be a master standalone thing, because it seems like it's only the masters who are really active and commenting, which makes sense. You guys had wisdom to be masters in the first place, right? Can't be surprised about that. But yes, I think what we will end up then doing is we're gonna then call it a night. It seems all the guys who are here for free are not active. I'd rather spend the extra time working on these charts for you as masters, tidying them up, putting in some levels, putting in some examples of what I think is going to end up happening. Yeah. Cool, guys. So Yeah, so I think let's call it, guys. We've had a couple of hours together. I think this will be approaching on 3 hours or so. I can see it's only really the masters that are in this with us, which is good. This was ideally for you guys more than anything, but I think these are going to be things we're going to expand on further in any event together. So yeah, let me get this some of these levels set up a little bit better. I'll send the masters the charts that I've currently got. Masters should already be chiming VIX quite nicely. Yo, VIX is on a mission. What a runner. So VIX is on a mission. Still, guys, remember exactly what I said based on that 5-minute setup there. It doesn't seem she's slowing down at all. Like, if anything, it seems like VIX is just getting more and more angry. More and more aggressive in terms of that upwards move. I don't know what that is in pips at the moment, but yeah, it should be... I wouldn't be surprised if we crack 1,000 before the end of the evening. Masters, just know... I'll be awake. I'll send you guys the message if I do see it turning around. I'll let you know to potentially protect your trade setups. Outside of that, we are really well positioned for a very active week this week. We're going to be very active. All my focus is on the markets with you guys as we build up to be a pretty great wrap up to the month. We're going to obviously push pretty hard up to the 28th. And in the 1st of September, we're obviously starting a new month with a lot of new individuals. Some faces you guys will know, some you won't know. We're going to start the new month with quite a lot of different support services so that you guys get trades, opportunities, updates from me in a lot more of a quick and obviously differently packaged scenario, which obviously makes it a bit easier for you to interpret and act on. And then obviously if you're in DVDM markets in general, supply you those 500 pips worth of profits over this next week. We'll probably do that in one day. 500 pips is like 1 day worth of trades. So on Wednesday I'll be live. I'll be trading live on Wednesday with you guys that are just in DVDM markets general, and then we'll obviously send through those trades. So then you'll bank your 500 pips absolutely free. Remember, 500 pips at a standard lot, you're talking about $5,000, which is 75,000 Rand. So yeah, a ton of value obviously. And so in terms of Joshua's question, I think I did address that. I can't tell you the exact turning points in a public domain. That's masters obviously information. So as I said, I'll be up. I will message you guys and give you instructions how to deal with VIX in terms of the different turning points, turning times, what to watch out for. Outside of that, map it out in 5 minutes just like you've got behind me, and that was all the information you really need to obviously understand if it's a breakout. If you want to protect profits in totality, map it out in 5 minutes, place your stop loss below the last area of resistance or the last support, and then you're good to obviously make sure that you are protected. Mackenzie is asking, please add me to the group. I don't know who Mackenzie is or why he's not added to the group. You're welcome to inbox one of the admins. Yeah, you're welcome to inbox one of the admins or follow the links and you will be getting in there. Outside of that, guys, I've had a good time. I'm going to continue a little bit more on my side, just do some more research into the market to look a little bit more in depth in terms of what it is I'm busy seeing. But I am obviously quite fatigued and obviously pushing out through camera. My focus needs to be here. This is where the money is right now. So outside of that, guys, listen, had a good session with you guys, had some good time. Mark cashed in at 304 flat. Yeah, with VIX, it's difficult just to cash in. You've got to kind of ride it out. That's why generally multiple positions. If you can, obviously, ride out VIX in multiple positions. Kunene a master's. If you're a master's student, please message on the master's group. I'll help you with a training video on TradingView, all that other stuff. If you're not a master's student, my time is not free. You may think it is, but it's not. So you're gonna have to, there's plenty Google some videos there. There's there might be a useless person there that will describe it. Outside of that, guys, listen, thank you. I'm gonna spend some more time in the markets. Next week we're gonna have an absolute cracker. Outside of that, listen, love you guys. As always, trade safe. If you haven't been through the Quantum Growth Markets Academy, please go through, complete it, and obviously make sure you share that with many people. I see a lot of students who are still questioning some of the questions that are already in the academy. So welcome there, Hanuk. I see you have just subscribed. Go ahead, go through the academy. It's free. I've put it there as a gift to the world to take Forex in general so much further, and for people to avoid being scammed, right? People end up paying, you know, tens of thousands of rands for a one-on-one with an hour, and some guy's telling you about trend lines, right? This is basic stuff. This is everything I've discussed tonight is the basics in trading. Everything above and beyond that is where you start to develop your skill as a trading person and moving into a professional way of trading. Okay guys, in terms of the link, I think the guys will be able to drop it in there for you. Thank you for reminding me there on that, Josh. So I've pinned it as well. Dropped it in 3 times. I don't know, my bot will kick me out of my own thing. Can you be banned from your own channel? I'm not sure. Well, we'll find out very, very soon. Anyway, the link's there, guys. Listen, I love you. If you've watched this and you've had a good time, it's free. You're welcome to share it with anybody. I might leave this one on. Yeah, so inside the academy, as Joshua said, you'll learn how to be a part of the groups through that process. It is going to change. I think I'm going to leave this. I think I'm going to leave this video public for those of you who want to revisit this, maybe in the morning, maybe it's late, you want to relook at this. I'll leave this one public, but all future analysis marathons, which we'll probably do Sunday evenings, is going to be with masters only. If you want to know how to be a part of masters, make sure you're in the original group, and then you can inbox any of the admins and they'll explain the process or redirect you through to me, and we will take it further based on that. And there's also some very exciting news coming out in terms of how to take it to the next level. Maybe you're not quite ready to be a master, but you want to just get some trade opportunities, you want to be in more shows, you want to be in all these other things, and the team is busy devising a very special way for you to be a part of that, that is as cost effective to you as humanly possible. I personally think it's a giveaway, but it's a cost effective way of you getting just more trade opportunities, signals, and without yet learning the full sort of detail. So the team will advise you guys very, very shortly on how that works. That whole side of the business is being run by masters, so they are in control of that particular boat. Outside of that, guys, I love you. Have a good evening, stay safe, trade safe as always. Trust you guys have had a killer weekend. Hopefully you didn't have a killer weekend. Hopefully you didn't kill anybody, but you've had a great weekend and a great Sunday. Thank you for spending this time with me. Welcome. Comment on the video after the fact. Let me know what you would have liked to have seen. Let me know what parts you've enjoyed. Feedback is always welcome. And outside of that, be safe, trade safe, and I'll see everybody, the general public. Remember, we are live on Wednesdays. I trade live on Wednesdays with everyone from around the world, but outside of that, for my particular masters, I'm live with you guys Tuesday, Wednesdays, as well as Thursdays, and there's going to be a bunch of different special stuff we're going to be doing as well in between. Outside of that, listen, again, love you, be safe, see you guys a little bit later. As always, shalom.